Imagine waking up tomorrow and seeing your bank account wiped out. Your investments, your assets, everything gone in 48 hours. This actually happened to millions of people in October 1929. And while entire families were selling everything for any price they could get, one man was buying a factory for less than you'd pay for a car today. Another was buying land for pennies per square foot. A third was investing in a nearly bankrupt company that 10 years later was worth a fortune. The question isn't, was $10,000 a fortune in the 1930s? The real question is, what separates those who lose everything from those who build empires at exactly the same moment in exactly the same crisis? Stay until the end, because the answer will change the way you look at your money today. Before we continue, like this video right now. Not at the end, now. Because what I'm about to show you shaped the greatest fortunes of the 20th century, and almost nobody has ever connected these dots. Subscribe too. The next video is going to hit even harder. It was 1930. The world had broken. In the United States, millions of people were unemployed. Soup kitchen lines stretched around entire city blocks. Men in suits, who months earlier were executives, were selling apples on the sidewalk for 5 cents to survive. The American GDP fell nearly 30% in 3 years, and US $10,000 back then, in terms of purchasing power, it would be the equivalent of having almost $180,000 sitting in your account today, an entire lifetime of work for an American working-class family. But here's what history books rarely tell you. Between 1929 and 1939, while the majority were sinking, more concentrated wealth was created than in any other decade of the 20th century. Not in spite of the crisis, because of it. Think of a company you admire. Now imagine its stock dropping 90%, but only those with cash in hand can buy. That's exactly what happened to entire asset classes in the 1930s. Solid companies with decades of history were being sold for nothing. Real estate in Manhattan dropped 60–70%. Productive farms were auctioned off for tax steps that barely reached $200–300. John D. Rockefeller, already the richest man in the world, began buying publicly. He made a famous statement. He said that he and his sons were buying American stocks because he saw the country's future with confidence. The market ignored him. He kept buying. Joseph Kennedy did it differently. He got out before the crash, stayed liquid in dollars, waited for the bottom, and bought film assets, real estate, and companies while everyone else was still in panic. He built an empire worth tens of millions of dollars, which funded his son's political career decades later. The pattern is always the same. While the crowd sells in fear, those who get rich buy with method. And you know what's most cruel? These opportunities exist today. In Bitcoin at its lows, in American stocks plunging due to market panic, in REITs, American real estate investment trusts, trading below the actual value of the properties they own. Tip: create an opportunity reserve in dollars right now, separate from your emergency fund. An amount you don't touch under normal circumstances. It only exists for the moment when the market collapses. When everyone is scared, you'll have ammunition. That's what the Tycoons had that most people didn't. The Tycoons of the 1930s were not smarter than you. What they had was a logic that most people refused to use because it was too emotionally painful. Bernard Baruch, one of the greatest speculators on Wall Street, had a simple rule: buy when there's blood in the streets, even if the blood is your own. He applied it clinically. While friends were losing fortunes in dollars, he separated broken companies from temporarily discounted ones and bought the latter. The difference? A broken company has more debt than assets, a dead business model, no future market. A discounted company has solid fundamentals, but is suffering from the general panic in the market. Today, the reasoning is the same. When Bitcoin fell from US dollars 69,000 to 16,000 in 2022, was it broken or discounted? When American energy company stocks crashed during the pandemic, were they trash or opportunity? Those who thought like Baruch and bought at the bottom, 2 years later had doubled or tripled their wealth in dollars. Tip: before any investment during a crisis, ask 3 questions. Does this asset have real fundamentals? Is the problem temporary or structural? Do I have the patience to wait 2 to 5 years? If all 3 answers are yes, you're thinking like a Wall Street tycoon. But not every tycoon used the financial markets. One of them used something nobody expected: imagination. September 1934. A man sitting in a small office in Burbank, California, nearly broke, with a pile of dollar debts and an idea that everyone called crazy. His name? Walt Disney. He had already gone bankrupt once. He had already lost the rights to his own character in a bad deal. He had already watched his studio collapse. And in the middle of the Depression, when any rational person would have given up, he gathered his team and announced, "We're going to make the first feature-length animated film in history." Hollywood called the project Disney's Folly. The banks in New York said no. His own wife said it was too risky. He mortgaged the house. He borrowed US $1.7 million, an absurd amount for the time, in the middle of the Depression. In December 1937, Snow White premiered. Lines out the door, a standing ovation, record box office, more than $8 million earned at a time when a ticket cost 25 cents. It was the highest grossing film of that year, in a year when the country was still bleeding economically. Walt Disney didn't ignore the crisis, he used it. While everyone else was cutting back, he invested in something people desperately needed: to escape reality for 2 hours for $0.25. He understood what the crowd was feeling and delivered exactly the antidote. That's the turning point that tycoons see and others don't. In every crisis, there is a collective pain, and whoever solves that pain gets rich. Map the pain of the current crisis. What do people need most right now and are having trouble finding? Financial security in dollars? Passive income in a strong currency? Affordable entertainment? The business, service, or skill that answers that pain today is the equivalent of what Walt Disney did in 1934. You know what Rockefeller, Kennedy, Baruch, and Disney had in common? None of them knew the crisis was going to end. They had no certainty, no guarantee, no information that you couldn't have had too if you'd been there. What they had was something simpler and rarer. They acted even without certainty. They bought dollars and assets without knowing the bottom. They created without knowing the outcome. They bet without knowing the return. And that's exactly where the secret that nobody tells you about building real wealth lies. It's not about having the right information at the right time. It's about having the courage to act when nobody else is acting. The crisis of the 1930s didn't choose its winners by the size of their bank account. It chose them by the size of their courage, and the next crisis will do the same. Like this video now if this content was worth your time. 1 click is all I ask. Subscribe to the channel because in the next video, I'm going to tell you what happened to Walt Disney after Snow White premiered. You won't want to miss it. There's one thing that bothers me every time I study these guys. They weren't special. They had fear, they had doubt, they had sleepless nights just like you. The only difference is they didn't wait for the fear to pass before they acted. They acted with the fear right beside them. You can too.